Episode 22, Talking Bitcoin with Pierre Rochard.
Interested in Bitcoin?
Bitcoin is a very vague concept to a lot of people.
Need to know more about cryptocurrency?
We're going to talk about the basics. You know, this is something that people just have no idea about what crypto is.
How about buying, selling, and mining?
Tony, I think that's one of the things that's going to make us a little different from some other shows.
We're getting our hands dirty.
Then listen to Gary Leland and Tony Sakala, better known as the Crypto Cousins, on the Crypto Cousins podcast. This week's price.
This week's price of Bitcoin is $8,280. That's down $786 since last week, or 8.7%. Howdy, howdy, howdy. Welcome to the show. Gary Leland here.
And this is Tony Sakala.
The mad scientist of crypto mining, Tony Sakala. Tony, you guys listen don't know, but he is like a mad scientist at this. He's like studying, testing, up all night. He's falling asleep before at his computer working on it. Me, I'm just a marketing guy, so I just go in there and go to bed. Tony is the mad scientist. So when it comes to mining, everything I know, which isn't much, I've learned from Tony.
Well, thank you, Gary. I have a very gracious wife, too, who allows me to completely tear the house upside down. We have miners everywhere. We have miners half built on the dining room table. The place is just, it's crazy.
It's crazy, and I'm trying to get him out of there as fast as I can for her. But it's hard to get Tony to give up on one of those machines there. I got to test it some more. I got to do this. But we're slowly but surely getting him out of there.
Yes, we are.
Hey, Tony, I want to make sure everybody knows, if you haven't before, check out our Facebook group. I say this every show because we have like the best Facebook group around. Just go to Facebook, search Crypto Cousins. It's the easiest way to do it because you're going to be on Facebook probably anyway, and join our group. We got probably the most helpful group that there is. I mean, I think.
I agree.
Not much to say about it. That's it. Join the group there. And also, if you are listening to this on a website, make sure you go to cryptocousins.com/subscribe. If you found us on YouTube or Twitter or anywhere, go to cryptocousins.com/subscribe, and you can subscribe to our podcast. You can find every device, everything that we're on. So that's like a real short link I made for you. And give us a call with some comments. We love getting phone calls with comments and questions. What's our phone number, Tony? I don't even know what it is.
I love our phone number. Yes. It's 747-777-9471.
Yeah, I love that number. You're luckier, as Tony says, just for dialing it. I just couldn't remember. And then but we want you to get involved with the show. To us, Tony, I think you agree. This is like, we're like a family, all of us. We have a family thing going on here.
Exactly.
Kind of like a family affair. I think that's a song.
It is.
Yeah. Well, I guess there's no use messing around. We got a long show coming up for you, just with the interview.
Show for you. A really great show. Pierre Rochard really knows his stuff. He's one of the most captivating thought leaders in the space. He's very reasoned and reasonable. He really takes a hard line when it comes to Bitcoin. He considers himself a Bitcoin maximalist.
Well, you do too, Tony.
I do. So we're like really close cousins. Pierre Rochard is the co-founder of the Nakamoto Institute, a well-known proponent of Bitcoin. He hosts the Noted Bitcoin podcast with Michael Goldstein, and that's where they discuss current events in Bitcoin. Pierre is a Bitcoin maximalist who foresees hyper-Bitcoinization, or the process by which a superior currency like Bitcoin supplants an inferior national currency.
Well, he knows his stuff. I can tell you that right now. He's one smart cookie there. I learned a lot talking to him. You want to go to the interview now, or anything else you want to add before we go over there?
That's it. Let's go right to the interview.
Well, Pierre, I appreciate you joining us on the show today. I know I'm excited to talk to you, and I know Tony, as a Bitcoin super enthusiast, is really excited to talk to you. Welcome to the show.
Thanks for having me on, Gary. Hi, Tony.
Good morning, Pierre.
So how did you get into Bitcoin?
It's probably pretty cliche at this point, but I got into it because I was a libertarian. I was in college. I was hanging out with fellow libertarians, and my two friends, Daniel Krawitz and Michael Goldstein, were already buying Bitcoin and researching Bitcoin and interested in it, and they dragged me into it. I was getting my master's in accounting, and so already I was interested in financial subjects, which Bitcoin is, and I was also interested in like gold and silver. I was like a hard money type, economics person. And so it appealed to both of those interests. And I fell down the rabbit hole. That was like December 2012 into January 2013. And yeah, haven't just gotten more and more obsessed. And it actually ended up being the case that I learned how to program because of my interest in Bitcoin. I wanted to write my own Bitcoin accounting software. So I went from just being an auditor at a Big Four firm to being a software engineer at a startup.
Wow. So that's changing and learning on the job?
Yep, that's right. Just taking up weekends learning how to code.
You just mentioned that you were in the silver and gold. I saw you say on a show that, and I found this real interesting, Tony, and I told you about this a few minutes ago. You said, Pierre, that Bitcoin can't be compared to gold, that's really not a good comparison. Could you go over that real quick?
Yeah, so I kind of meant comparison in the sense that when someone's trying to do a valuation of a company, they'll look for comparables. Or same thing with real estate. They'll try to find a house that's about the same square feet, same kind of location to see what the value of the house is. And people will do the same thing with Bitcoin and gold. They'll say, okay, well, gold is worth a total of X trillions of dollars. And so if Bitcoin were to get 10% of that or 100% of that, then Bitcoin would be worth, $300,000 each. And I understand that they're looking for something to compare it to, but I really don't think that gold is a very good comparison because gold has a very different supply mechanism than Bitcoin does, in the sense that when the price of gold goes up, it actually starts to become economically feasible for gold miners to go and spend more money digging up more gold. And so then more supply comes onto the market. Whereas with Bitcoin, when the price goes up, miners will get more, mining equipment and will dedicate more electricity to mining. But every 2 weeks, Bitcoin has something called a difficulty adjustment, which means that it becomes that much harder to mine Bitcoin. And the reason it does that is so that we maintain that steady supply schedule where on average, every 10 minutes, we create new Bitcoin, 12.5 new Bitcoin. And so in that regard, Bitcoin is actually less inflationary than gold.
Interesting. So the difficulty changes every 2 weeks to reflect the increased capacity to mine it.
Right, the increased hash rate. And so there's graphs online that kind of show this effect happening. And it makes mining a very tough business. And it's funny because when the price is going up, it makes a lot of sense to mine because, well, the difficulty the hash rate has not reached its equilibrium state versus where it should be given the price. And then the difficulty is adjusting, but only with a 2-week lag. So you can have situations where, for example, if the hash rate is increasing exponentially, then blocks might arrive on average every 7 minutes instead of every 10 minutes. But those are temporary effects until there's a difficulty adjustment.
So is that a bit of I'm going to call it a bug, or is that a weakness? Is the difficulty over 2 weeks something being looked at? I think some of the other coins, not to mention any names, have difficulty changing more rapidly.
I think that the view among most of the core developers is that there's trade-offs, and if you make it shorter than 2 weeks, then it starts being gamed by the miners. And if you make it longer than 2 weeks, then you start having too long of a lag between the hash rate and the difficulty. So it seems as though 2 weeks is good enough. Really, it in practice, it doesn't cause problems for the network. The big problem would be if every few years there's what's called the halvening, where the block reward, that is the number of Bitcoins created per block, is halved. And there could hypothetically be a risk where if the block reward halved and thus the hash rate also halved, then you would have to wait a number of months, or you'd have to wait, 2 weeks, but there's actually a limit on how much the difficulty adjustment adjusts. So in practice, you'd have to wait a few months before you're back to the normal 10-minute schedule. Because the hash rate halved. And the people were theorizing that would happen with the last halving a couple of years ago. But in practice, the hash rate has been going up so much that it wasn't even a noticeable effect. But in theory, in the future, that could happen. But ultimately, Bitcoin is very resilient to changes outside of its environment, and it adapts. So it's really a fascinating thing to watch.
How would that affect Bitcoin?
It would just mean that the transaction throughput would go down for a little bit of time. From 7 transactions per second on average to maybe 3 transactions per second on average, which would cause fees to go up for a little bit. But it actually, the fees going up would be a form of the adaptation, because the whole reason that the hash rate went down is because the block reward halved. But the block reward is only one component to how miners are paid. The other component is transaction fees. So if transaction fees went up enough that the halvening was, covered for and then some, then you actually wouldn't see any effect. So it's a dynamic system.
I had a question. I wanted you to help me because I wanted to get the answer from you on this, Pierre.
Okay.
Because I'm hoping you can help me with this, because this drives me crazy, and this happens to me everywhere I go. If I'm at like a meetup or something and someone's talking about Bitcoin, why is Bitcoin, I want to hear from you, not like the tulip bust? What are my 3 things that I can say besides you don't know what you're talking about?
Yeah. So I think that, first of all, if we're just looking at it like, all right, here's a generic chart of a boom bust cycle, right? Which is fair. That's a reasonable thing that we look at panics and manias and we map it onto Bitcoin because it looks awfully similar. And the issue, though, then, is that you can't just map one chart of the tulip bulbs to one chart of Bitcoin, because Bitcoin has gone through several quote unquote bubbles. And
the tulips went through one.
Right, exactly. And so you'd have to explain, why is it that this particular asset is not only very prone to bubbles, because you could argue that, real estate and banking, credit systems are also prone to bubbles. But also every bubble reaches a new all-time high, and every bear market doesn't crash down to $0 or lower than the previous bubble's all-time high. So I think that to me indicates that there is fundamental value there. And for example, with the last bear market, we reached a bottom, I think it was like $300 about. And if you study markets, you know that a bear market the price is going to go below the fundamentals, right? In a bull market, the price is going to go above the fundamentals. And so that would tell me that the fundamentals are greater than $300. And yet in 2013, we had a bubble, quote unquote, where it went from like $5 to $270. So to say that Bitcoin is in a bubble at any point in time, that might be a reasonable speculative guess. But then are you also someone who can identify when Bitcoin is not in a bubble and it's in a bear market and it would be wise to invest in it? So my view is that people come out with the tulips analogy very quickly when we're in the middle of a run-up. But I never really see them investing afterwards when the market's in a bear market and everyone's in complete despair about the price. So then we have to ask, like, what are the fundamentals, right? Because I think that a lot of the tulips people think that it's going to go to $0 because Bitcoin has no intrinsic value is kind of their perspective on things. And to me, the fundamentals are, you can kind of look at the fundamentals of the payment network, of Bitcoin, the payment network, which is that you can send Bitcoins to anyone, anywhere in the world, fairly quickly at a fairly low fee, although people have been arguing a lot in the community about that. But that's just the payments network. And I think that the payments network is actually a bit of a distraction because ultimately you can send Bitcoins outside of the Bitcoin payment network. There's hardware solutions. So, for example, OpenDime allows you to send Bitcoins to a USB stick, and then you can hand that USB stick to anyone, and you wouldn't pay any transaction fee, and it would be a completely anonymous transaction. But then there's also layer 2 solutions, like people have been talking about the Lightning Network, where the transaction would be instant and free. And so there's different ways of paying with Bitcoin other than the typical on-chain transaction that we're all used to. And so I think that the value proposition of the payment network, it makes sense for certain use cases. If you're sending money abroad and you're sending high value payments, and you need irreversible, and you need to have it, essentially not to deal with the problems that come with having to wire money to people. But ultimately, I think that the bigger selling point for Bitcoin is Bitcoin the money. And to me, Bitcoin the money, and this kind of comes back to my gold and silver roots, is that it's sound money. There will only ever be a total of 21 million Bitcoins created. And that is what, in my mind, makes Bitcoin valuable and attractive as an investment. And so that's why I think that there are fundamentals to Bitcoin beyond just the payment network, and that justify the price gyrating, but ultimately being greater than zero. And then the other thing too is that the tulips analogy, I think that, if we kind of look at why markets get into manias like this, it's because people start seeing the price drifting up slowly, and the price is just mirroring the fundamentals. And the reason Bitcoin does that over time is due to something called the Linde effect, which is kind of a heuristic to think about. The longer something has been around, the longer you can expect it to continue to be around. And so Bitcoin's been around for more than 9 years now. And so with every passing day, we can expect that it'll be around for a little bit longer. And that just mechanically increases Bitcoin's value. So I think that that's the fundamental upward drift of Bitcoin's value. And when people are seeing this value drift up, then you get momentum traders coming in and people anticipating more growth. And it kind of becomes a positive feedback loop where you get into a manic bull market, and then you run out of momentum buyers, and people start freaking out. They start selling. It crashes. It crashes below the fundamentals, and then Bitcoin slowly recovers and starts growing with the fundamentals again, and then we'll get more momentum traders coming in, and we'll have another bull market. So it's going to be kind of an endless cycle of this until Bitcoin reaches its full value.
We're talking about that Linde effect. Couldn't that apply to the U.S. dollar? And people predict the U.S. dollar is going to, or all dollars fade out sooner or later, all currencies. So how does that apply?
Yeah, it absolutely applies to the U.S. dollar. And I would argue it's why the U.S. dollar has not just evaporated. And really, though, then it's like, okay, well, how is that different than Bitcoin then? Well, the dollar has a radically different monetary policy to it. And so, if you look back at the 70s when we had a very high inflation rate and things were actually kind of getting out of control in the regard of the dollar losing its value, because you actually have the Linde effect with inflation. And so that's when what economists will talk about anchoring inflation expectations or the credibility of monetary policy. And what they're getting at is the Linde effect, essentially. And so when inflation was in the double digits in the 80s, or sorry, in the 70s, people were starting to expect that inflation would continue and increase. And the way that you break that kind of expectation is by radically increasing interest rates. And so Paul Volcker did what's called money supply targeting, where he said, okay, we're only going to create X number of dollars, and then the inflation rate will float around that. And so whatever inflation rate we need to make the money creation go down to this rate, that'll be the interest rate. And so the interest rate in the U.S., and I wasn't around back then. I wasn't even born. I was born in 89. But it went up into the 20% plus. And that wasn't, like today, if you hear 20%, you think, oh, well, that's just like a credit card interest rate. But that was the federal funds rate, which today is 0.5%. So they had to reset people's expectations at that point. And so I think that government monies have this persistent problem of either they have wild inflation and thus disappear, like the Zimbabwe dollar, or they have to go through these cycles, these big monetary policy cycles where they essentially build up credibility by having a sound money policy of high interest rates. And then they abuse that credibility by dramatically lowering interest rates and printing money. And I think that we're at that point of the cycle. And then once inflation starts picking up, might not be this year, might be next year or in 5 years, who knows? But when it does, then they'll have to dramatically increase interest rates to, again, reset people's expectations. And the danger there is that they're always playing a game of poker, and we never really know whether they're bluffing or if things really get out of hand and then the dollar disappears.
That's fascinating. I mean, really, now that we have Bitcoin and we see what a decentralized money looks like, there's just this picture of us like Wizard of Oz. There's a man behind the curtain, and he's pulling knobs and doing things and changing things, and just desperately trying to control something that is almost out of control when it's done in that centralized fashion.
Yeah, that's right. And I think that's actually one of the biggest risks for Bitcoin is that the central banks freak out and have enough influence over the legislature to pass legislation to prevent Bitcoin from growing somehow, whether it's by banning it, making it illegal, or making the regulations so onerous and so difficult to go through that Bitcoin loses its appeal for just casual users who aren't interested in financial sovereignty per se. And I actually don't think that's a huge risk in the United States. I think that the Federal Reserve in the United States, from a political point of view, is on the defensive. Whether you look at, Ron Paul and his son Rand Paul, they were pushing for audit the Fed, but that might seem like just a kooky libertarian minority. But there's also a lot of Republicans in Congress and Democrats in Congress who are annoyed by the lack of transparency from the Federal Reserve and very weary of its ties to Wall Street and kind of it helping insiders in that regard over Main Street America. And so I think that the Fed would actually have a very difficult time of getting politicians to go after a competitor in the United States.
Yeah, that was actually my next question. That was so great that you just rolled into that, and I didn't even have to ask that. Yeah, that's great because I think they audit the Fed too. I want to see what's happening there. I also hear a lot of people say another thing on TV. I hear a lot of people who are so-called professional money people on TV say crypto is the future, but it might not be Bitcoin. That Bitcoin might be the MySpace of cryptocurrency. I seem to hear a lot of people say that a lot. What are your thoughts on that?
Yeah, so I call myself a Bitcoin maximalist, and that kind of gets to that question of, is there going to be a world where we have many different monies And that I think is unrealistic in the sense that it makes commerce very hard to have a lot of different monies. And so the market tends to converge on one money. And so in practice, in the world today, the US dollar is the world reserve currency. And that's kind of what the world has converged onto. And monies trade against that in the markets, and the oil trades against that. And so in that regard, I think that generally the market for money tends to converge onto one, usually through an economic process, but it also happens through a political process. For example, in Europe, they decided that it was very inconvenient to have all of these national currencies and instead created the euro. So then the question is, well, okay, why would it converge onto Bitcoin versus Ethereum versus Monero or Litecoin or any other altcoin? And there, I think that there's a number of factors, but the main one is the Linde effect, as I was talking about, which is that Bitcoin's the oldest one and it's been around the longest. And so people have the most confidence in it versus other monies. And then there's other factors that go into it as well, though. Bitcoin's monetary policy, I don't think can be improved upon. I think that telling people, oh, there will only be a total of 21 million Bitcoins, I don't think that you can come up with a better marketing slogan that would hit kind of the reptilian scarcity button any harder than 21 million. So in that regard, I think Bitcoin will, any competitor, all they can do is just match that, right? And say the same. And then there's also the question of the underlying network that the money is based on. What are its security and trust properties? I think that's crucial for money, right? Because if the underlying network is very fragile and open to being changed in radical ways, then we have to be very cautious with the money that is based on it, because then that monetary policy could also be changed. And so that I think is the danger with hard forks, right? Because the only way to change the monetary policy of a cryptocurrency is by doing a hard fork. And in politics, you could analogize it to having a constitutional convention where all the rules are fair game. We can change any of the rules. And so my bias would be to have as few constitutional conventions as we can, because we're already very happy with the current rules, and we wouldn't necessarily want them contracts that they're tying into their blockchain. And so when the contract gets quote unquote hacked, like we saw, I think it's probably 18 months, a couple of years ago now, with what was called the DAO at the time, there can be a lot of pressure on the community to hard fork, to take the money back and to void the contract, essentially. And so I think that actually adding features to the network is great for marketing, but ultimately for the stability and for the continued security and trust in the network, it's actually not a good idea. I think it's best to keep it minimalist, to keep it simple, and to keep it independent from other concerns other than money and payments.
Okay, well, that's a whole show in itself when you start getting into hard forks, for sure. There's a lot to that. We are getting close to our time. We like to keep these on. Tony, do you have anything you want to ask him before we get out of here? I know he has a time cap too.
Well, maybe we should wrap up with the question that what is your one of your advices to people struggling to understand Bitcoin is to read more. And can you maybe give us a few resources, some good places to start?
Yeah, I think that the best place to start, and it'll take you a little while to work through and digest, but it's a book called Mastering Bitcoin, and it was written by Andreas Antonopoulos. But he wrote it in a very clever way. He made it open source. So a lot of different people contributed to this book, and I think that it makes it the highest quality physical book that you can get your hands on and start working through. So if you go to Amazon, your favorite bookstore, and search for Mastering Bitcoin, get the second edition, which recently came out, and start working through that. I think that you'll learn a lot from that alone.
Fantastic. Yeah, Andreas's work is really profound. He introduces the ideas in a easy to understand way. Now, is that the Mastering Bitcoin, or is that the Internet of Money you're referring to?
Mastering Bitcoin.
Okay, fantastic.
Is there anything that you personally want to add or go over before we get out of here?
No, I would just add that I also have my own podcast. It's called Noted, Noded. So if you go to noted.org, you'll see our previous episodes. And I'm also a member, so I with my college buddies, Michael and Daniel, we created the Satoshi Nakamoto Institute. So if you go to nakamotoinstitute.org, we have a lot of different reading resources. We have everything that Satoshi publicly wrote. And then we have our own blog where we've been writing our thoughts. So definitely worth checking out. Probably after reading Mastering Bitcoin, because we don't assume, or we do assume a lot of prior knowledge.
Oh, yeah, that would make sense. And where can people follow you at?
On Twitter is the best place. I'm on Twitter probably too much. And so it's at Pierre, Pierre _ Rochard, Rochard.
Well, great. Well, I appreciate you coming on the show, and I want to let you know you are now an honorary cousin Pierre. You have the title there. So everybody who comes on our show becomes one of our cousins.
Thanks, Gary.
So we appreciate you coming on the show, and will you come back?
Absolutely.
Tony, anything else when we get out of here, dude?
Fantastic. No, fantastic.
Okay,
thank you, Pierre.
Well, thank you, and we'll look forward to talking to you again, Pierre. Thanks again.
Thanks, guys.
Wow, that was really great content, Tony. I am so glad we got to interview Cousin Pierre.
Cousin Pierre is a bright guy, and you had some really great questions. You know, it's really, I like the way we come at it because your questions are completely different than mine. We could go write up a series of questions and they almost never overlap.
Yeah, no, our questions are never the same thing because we both are interested in different parts of the world of crypto. Or we both think differently about it. I think would be the better way to say it.
That's it, yeah. Mm-hmm. Yeah, different viewpoint.
But I look forward, he said he'd come back on the show, so I look forward to having him back. And I have a lot of questions we didn't get to ask him on that show. But I'll have more to formulate now that I've met him and talked to him. I can't wait to actually meet him in person. But I hope you enjoyed today's interview. Don't forget to go to cryptocousins.com/subscribe and check out all the resources you can find us at. Give us a 5-star review on iTunes or wherever you're listening to us at. Tony, I think we're almost at 100 5-star reviews on iTunes now.
Well, I picked up another one for us today.
Well, there you go.
I was talking to a colleague. I said, hey, and if you like us, give us a 5-star review.
Well, that's what everybody should do if they like us. That's the least they can do. If they don't like us, don't give us a 1-star review. We had someone do that.
Unsubscribe right away.
Yeah. You don't have to give us a review if you don't like us. But if you do, we'd appreciate it. I really don't have much else to get into. Oh, if you want to, check out our donation page at cryptocousins.com/donate. We have a Patreon account. We got several ways you can throw us a bone if you want to. If you don't want to, that's fine too. I mean, it's just there if you want to throw us a bone.
It's a good feeling.
How people start saying throw me a bone? What's it?
I don't know. I don't like animal references. It's just it goes kind of rubs me the wrong way. Oh, that's another animal reference, I think. But anyway,
it could be a people reference. Tony, it can mean throw me like a femur or something. I mean,
you really get the real black humor there. Yeah.
That is. I'm sorry, Tony, but it doesn't have to be an animal. It could be. I guess it would be an animal. No one's throwing around body parts. Hopefully, So let's get out of here. This is getting worse every second.
All right, let's get. Yeah, we are. We're going spiraling downhill.
Hey, everybody! Thanks for listening.
Thanks for listening to the Crypto Cousins podcast. Please share this podcast with anyone you know that is interested in cryptocurrency. Your friends can subscribe on iTunes at cryptocousins.com/iTunes and on Android at cryptocousins.com/play. If you want to know more about Tony or Gary, just go to tonysakala.com or garyleland.com. Make sure and join us on the next episode, and thanks for listening. The Crypto Cousins podcast and information in the podcast are not intended as investment advice. Cryptocurrencies are risky. Never invest more than you can afford to lose. Always seek professional advice before making any investment. Investing in Bitcoin and other cryptocurrencies may present tremendous risks. Please understand that you are using any and all information available on or through the Crypto Cousins podcast at your own risk.